Hello, today is Friday. It's just after the close. It's 4:24 p.m. This is Jonathan Gurney, Portfolio Manager for Gurney Financial. We're not going to make this video pretty at all. We're going to get it right at it, hit the details you need to know. We did not have a video last week. To be honest with you, it's probably going to be a once every 2 week a once every 2 week kind of ordeal because people are just looking way too close. I have clients looking every day at this point, which is getting it's not what I want to see. This is still all long term. I'm trying to protect as much as possible. So I'm happy to do the videos, and I have to do it for myself, obviously, and I have to do the research regardless. But it's something that if you're watching every day and not used to it, you're going to make bad decisions. And I'm starting to notice that with some clients already. So hang in there. So here's the performance year to date. You can still see we're making progress. Okay. The NASDAQ was down 30. S&P was down 20. So we're making progress. S&P was down 22 at one point. So we're making progress, but are we out of the woods? I don't think so. Does it mean the low's in? It doesn't matter. We can follow price action and no. So this week, even though it's very volatile, we did have a positive, very flat-ish week. Really what's driving everything is growth. Growth is really doing quite well. And even under the table, under the hood, the Russell 2000 is actually doing okay too. We performed decently this week. We beat by 1.15%. Now, I want to be realistic. 2 weeks ago, we were beating by 20%. This is frustrating to me. Last week, I needed to take a break, a breather away from everybody and just say, I need to get my mind right. I need to make sure I'm not biased because the more phone calls I get that say the world's going to end, I can't hear it right now. That's just the reality. I got to protect my mind and do things and get away from the screens at times. So I'm just being real with you. It's not an easy job. And we want to be upfront with you about how we did. So really, we played protection most of the time. We pressed hard when we saw buyers come in. Here's the deal. Here's what I've been saying all along. And here's what the frustrating part is, okay? As previously stated, I thought the end of July would be a nice rally. Seasonality, this red line right here. This is what I wanted to have. Here's the problem. And you're seeing how hard this game is if you actually understand how it works. Okay, so if I show you this, none of this is an excuse. It's just, hey, here's what happened, okay? We had several gaps up toward the end of July. 1, 2. We had another one in here that just filled and regathered. But we have several gaps that will eventually be tested, okay? It doesn't mean it's going to happen right away. We still have one that we were close to filling today, which is like the 40, 90-ish area. In short, I'm not sure the risk reward is great here. What is really driving the market right now is the number of shorts on the table. What's been interesting is the put call ratio is actually low. Put call ratio is basically saying the amount of protection or people hedging their portfolio thinking the market's going to go down. This was as of Thursday. The put call ratio was only 0.55, which is pretty low. Usually a 0.4 is, for me, like, hey, be careful because people are getting too complacent. So we're kind of right. Did we hold 41.30? Yes, we did. And that's a good thing. Okay. So bulls are still in control, but it's a little bit complacent in my opinion. So in short, I think we need to hold 41.30 still. And I'll bring this up so you can see it. 41.30, hold 41.30. And worst case 41.05. We are testing technicals right on the nose. Today we tested what? The low right here, 41.05, 41.07. I mean, technicals are working very, very well. You're like, Jonathan, why didn't you buy that? I had 50% on. I didn't want to take a lot of risk, and I got out on the first bounce. It was a little premature, but still, I think we're in perfectly fine situation. So I'm in cash right now. However, here's a tricky situation is I think based on seasonality, we do hit 4,200 at some point. I think going into this, I think we do push to 4,200 at some point. Okay. But is the risk reward great knowing usually from August to the end of October is not great. No. So I got to be really careful about that. Eventually, we're going to get off this map. And so I need to be non-biased. I can't listen to anybody else who thinks the world's going to end every day. So here's kind of interesting. After the bell, we're going down a little bit. Here's the short-term chart, okay? Short-term chart. I usually do not like this setup. Just being honest with you. A triangle and a late breakout. You're a little close to overbought. Price action is fine, I objectively, but I usually don't like a triangle breakout at the end of the day. I think it's kind of trappy. This whole day was trappy. So overall, we're in cash right now. Don't plan on being there long, but price action is still in favor of the bulls because why? We are over 130 right now. And that happened in the last 30 minutes, of course. That's just the way it works. We had a little squeeze at the end of the day. We're holding the uptrend line, which is good. We are above the 5-day moving average based on what happened in the last 25 minutes. You got to understand, we're getting 0.5% move in 30 minutes. It's just the way it works. You got to suck it up sometimes. I'm not sure if this move is real or not. Really, today was nixed, meaning there's really no conclusion based on what happened today. So here's the deal. What I want you to understand is many of you are like, Jonathan, GDP is poor. That means we're actually in a quote unquote recession. Definitions are dumb. The market's been in a recession since June of 2021. Okay. So the market's been in a recession for a while. Now the economy is officially seeing one based on definitions that somebody made up. Okay. That's fine. No problem. If you want to call it a recession, it is what it is. But what did price action do the same exact day that headline came out? It rallied. Number two, earnings. Are they great? No, they're not. Why is everything going up? Because expectations are low in this environment. So it's not that things are great. It's actually things aren't great, but it's better than the horrible expectation analysts have on it. Poor inflation data. There's another one. We had poor CPI last week. It rallied. Jobless. It was actually good information, but what are the two things that dictate the market? Earnings and interest rates, also known as the Fed. What is the Fed doing? They're raising interest rates. So usually the reason why we had today's dip this morning is the information that we got this morning was basically saying that it's right for the Fed to keep raising, which you would think would make the market dump, and it did, but it came back and we regained 41.30. So bulls are still in control. So the point of all of this is a lot of bad news, but could it be baked in? You have to be non-biased at this point. This is over a 10% rally on horrible news. Now, here's the downtrend line right here. Okay. We are above it right now. This blue line is the downtrend line. We did break that and we're solidly holding it right now. The 5-day moving average, look at this too. The 50-day moving average is trending up, which is good. So good things are happening. I'm just a little concerned with what could happen in the very near term, especially with seasonality kicking in at the end of the month. So no bias at this point. I do think objectively that 4,200 could happen. And you can see here, I got to be really careful here because this is not a small move. Okay. Doesn't mean it's going to happen. We could rally the rest of the year and people would be offsides again. But I'm going to respect it until this doesn't happen. Why? Because this is what we've been following the entire year, almost exact. Not percentage-wise, but the chart in general. So you follow something until it doesn't work. Okay? So that's basically all I wanted to show. Really what's driving us right now is the QQQ, which is all the main growth stocks that you want to be in. Today was not a good day for that. Why? Because yields were much, much higher today, which usually is a burden on growth, which makes sense. But it has had such a big rally off the bottom that it is already overbought and took a breather today. I don't think it's over. It did hold the 5-day moving average, which is good. So it's still in trend. So you have to be objective here. Things are not bad price action wise. It's horrible. I mean, you add things like China bombing. There's another bad headline. It did nothing to the market. Yield curve, horrible, like 35 points negative. That's not good. That doesn't mean the market cannot rally. Your biggest rallies happen in downtrends. It doesn't mean the low is in, like everybody is saying. Here's what I think is going to happen. Before we can see a reasonable dip, you have to see more shorts. And down here, everybody thought the world was going to end. We had worse and worse news, and the market kept going up. Why? Because this put-call ratio was extremely high. The put-call ratio around here was much higher, as you can see. Like, look at this. This is crazy. This is a good buying opportunity, and we had some in at that point. And the VIX is trending lower, which means volatility is getting lower and lower. I think we might need to see below 20. I think we might need to see 40s in the put call ratio before anything can really get a sustainable downturn. There's just not quite enough complacency yet. We are seeing new highs, new lows. The new highs is increasing. The number of lows is decreasing, which is good. This is exactly what you want to see. So objectively, a lot of good things are happening despite the news being horrendous. Everybody's screaming recession because of a dumb definition. This does not mean that I'm actually bullish. Short term, I think you can be okay for a couple weeks. But midterm, I think we're going to have some challenges. So overall, we're in cash right now. I'm going to keep trading price because why? We're above 41.30 and price says you're in trend. Don't be too bearish here because this can go higher just because everybody's negative. That's when the market goes higher, is when everyone is negative. Now, the put call ratio really isn't that high, which is why I'm like, I don't know if we can squeeze much higher yet. We might need to test one of these gaps. Like eventually these gaps get tested. It might be a little bit, it might be months, but eventually they do get tested. So overall, I think it's right to remain unbiased at this time to say, hey, right now things are still in trend. However, you have to be objective and say, there are some big challenges ahead. And I'm very realistic. I'm not just saying the world is perfect right now because it's not. There are some big challenges ahead, especially with the midterm election. Not to be political, it's just usually there's volatility around there. So overall, remember, the market is usually 6 to 9 months ahead of the economy. With that said, I'm not sure we have actually seen the problems that a typical recession sees. So overall, regardless of any of this worrisome talk that may be happening right now, usually 1 year out, everything is positive. Like if I showed you studies from now, like Ryan Dietrich, he has great stuff out there that basically says, regardless of what happens, even if this is not the low, even if this 36.36 right here is not the low, it still historically shows within a year, all of this is positive and all the losses are regained. So there's the positive side. The short-term side is, I think we need to protect a little bit. I think it could be difficult seasonality, and just typically the year after like a 10-year rally, 12-year rally, you have a frustrating year like this. And so I need to protect at times where it's a little bit uneasy, not really seeing a great setup here. In fact, I think this could be very trappy, to be honest with you. But overall, price action is good. It's hanging in there. Do not get too negative, because when I need to press hard, like I did on this day, it comes in big rallies like it did at the end of July. And I've told you this many times to say, usually you have 4 different times in the year that you get 10% rallies. The rest of the time is sideways to chop, and it's not good to be in. I think we're about ready to hit another one of those periods where it doesn't make sense to be pushing too hard. So in short, we've had a great rally. Unfortunately, many of the moves happened overnight, and I did not do well during that period. So I'm not worried about the underperformance right now. Sometimes protecting a portfolio is more important. And I do think recovering that very quickly, I mean, it could happen in 2 weeks. So hang in there. I'm frustrated by that. However, 20% if I short when the market goes down, I end up making a lot of money. So hang in there. We can make this back very, very quickly. So thanks for your trust, just being real with you. Hope these help. Have a great weekend. Get outside. Don't watch the news because it's only going to be negative despite what the market's actually doing. So thanks, guys. See ya.